Everyone, and welcome back to another episode of WagMe TV. The boys are back here after a 2-week hiatus, and boy, we came back on a pretty wild day, huh? The worst day since 2020 for the S&P 500, absolutely wild CPI print, huge surprise to the upside given consensus expectations, and we're here to cover it all for you guys today. We're going to cover what happened, what the news was on the CPI, why it matters, and what you need to do to navigate the future in this turbulent market environment. Back with the boys, as always, I'm joined by the All-American, Ev Smith, the Doctor, Doc Mata, and the NFT Lord himself, Alex Garcia. How we doing, boys?
Doing well. Crazy day. I think it was the worst drop in the S&P since July 11th, 2020, like you said, Zoe. Yeah, pretty wild. So interested to dive in and get your guys' pick on it.
And as we've been saying for the last few months, right? Like all eyes on the CPI print, all eyes on inflation. And I think a lot of people got caught way out of position here. A lot of people, a lot of investors thinking that inflation was going to taper off here. We'll get into it. We'll give you everything you guys need to know. And yeah, Ev, you want to hop into it?
Wild day. So expectations were coming in for the CPI print, I believe at right around 8.0%. And so a little context, in June, we had a 9.1% CPI print. July, we had 8.5, coming down a little bit. That was about 0.5%. In August, we had this 8.3% print. Sounds pretty good. Sounds like we're slowly decreasing and going in a good direction. The big problem that we had here today, though, was the core CPI. And so if you guys remember from past episodes, core CPI takes out the energy, takes out the food, two highly volatile areas that can cause like inflation to jump high or go low. So it's not a great idea of what consumers are seeing on a daily basis. But in June and July, we had a 5.9% core CPI print. But today, we found that in August, it was 6.3%. So that's popping up 0.4%. It totally goes against the entire rhetoric that we're slowly fighting off inflation, that it's not as sticky, that we can continue to work through, and that it's really driven by those food and energy, sectors. And so that was pretty disappointing. Like Zoe said, like Armada said, that was the reason behind the sell-off that we saw today. And diving into it even a little further, we saw core CPI go up almost a full percent on the month over month, going from July to August, which was twice the rate we saw coming from June to July. So I know that was a lot of numbers, but while we saw the CPI decreasing in a good direction, unfortunately, we saw the core CPI growing and rising. And that was something that I think a lot of investors didn't love seeing today.
Yeah,
the one thing I'll add to that
breakdown there, Ev.
Yeah, Mata, the one thing I'll add to that is, we always talk about expectations versus reality when it comes to the markets, right? And here, when I was looking at, I think, it was a day or two ago, when I was looking at the consensus estimates all throughout Wall Street, I'd say like 8 out of 10 banks probably had like a 7.9 or 8 to 8.1 estimate on where CPI was going to end up. It was only like maybe 2 banks or something that had it at like 8.3, 8.4, somewhere in that kind of a area. And so when you see the street get way out of position like that, you know there's going to be kind of a big move in the markets, which we're going to cover coming up here. Mata, what were you saying?
No, stole the words right out of my mouth there. I mean, I think it's very important to note, and we've said this throughout the amount of time that we've been tracking this over on the WAGB side, right? It really depends on what that difference is between the expectations and how things actually come to be. And so, the markets, they're spooked, right? Inflation, the CPI number isn't coming down as swiftly as they'd like to see, right? As we know, based on how they've kind of predicted what that consensus would be. And the core inflation, as we discussed with Evan here, which might be even a little bit more important from the Fed standpoint, it doesn't even look like it necessarily has peaked yet, right? Which that necessarily goes into more interest rate hikes, which is going to impact the market as well. So that's the next piece that we were going to go into here, unless anyone else has anything else to highlight on the CPI front.
Take it away.
Yeah, so I came across this today and I thought it was very interesting. So just to run through this chart briefly, it is the probabilities of certain rate hikes for this next Fed meeting on the 21st of September, which is next week. So our current rate is 225 to 250 here. And so by looking at this graph, these are, again, the probabilities. So the probability that they'll increase it to 300 or 325, so that would be a 75 basis point rate hike, is about 66% right now, versus a 100 basis point hike, so 325 to 350 would be about 34%, right? So the market today is now pricing in a 75 basis point hike or a 100% basis point hike for next week. One thing I want to call our attention to here is at the bottom here, as you can see, right, 275 to 300 would be a 50 basis point hike. 300 to 325 would be a 75 basis point hike. 325 to 350 would be a 100 basis point hike. If we look at some of these numbers, obviously in yellow here we have now, we have yesterday, we have a week ago, and then we have a month ago. So let's take a month ago, for instance. There was a 55% chance that there would only be a 50 basis point hike and a 0% chance that there'd be a 100 basis point hike. Even yesterday, there was a 0% chance there'd be a 100 basis point hike. Now we have almost a 34% chance, right? So 1 in 3 that will have a 100 basis point hike, which that changed after these numbers came out. And so what the market is doing is now pricing these in, which is why we saw that big hit and we all got kicked in the teeth today. And so I thought this was really interesting, right? You look at this yesterday, you look at this a week ago, you really only see two bars, but the difference is the bars were a 50 basis point hike and a 75 basis point hike. Now there's a 0% chance, as probability says from all these groups, that a 50 basis point hike will happen. So that is obviously really tough on the market, and a big reason that we saw a dip today.
And it's a total 180. In the span of one day, we go from considering that 50 basis point hike to that 100 basis point hike in that one day, and it feels like in past Fed meetings, we've always had that 100 basis point hike on the table. I think we talked about it maybe in June, maybe in July. Pretty soundly was always going to be that 75 basis point hike. It's almost like it's got an even better chance now. And it's really, people are thinking about it as a pretty realistic hike for this next Fed meeting coming up. So, pretty interesting. I think when we were in June and July, we were looking forward at August saying, hey, we're probably going to do a 50 basis point hike. I don't think we'll continue to see these 75 basis point hikes become so regular. It's the exact opposite. We're going up, it almost feels like. And so it's a huge or pretty significant change in sentiment.
Yeah. And I mean, coming out of Jackson Hole, Jay Powell was very, I feel like very strict about he's going to make sure that he's going to get inflation under control, and how they're going to do that is by crushing demand. And the only way they can crush demand at this point is by having these interest rate hikes. So really crazy to see just yesterday, there was a 91% chance of a 75 basis point hike, and basically no chance of a 100 basis point hike. And now you're seeing 34% just out of nowhere. So definitely a big hit to everyone's expectations, and you can kind of see that being priced into the market now. Speaking of, and it'd be interesting to even go back to a month ago and discuss kind of when some of these pumps were that we've been seeing, because I would assume some of the pumps were due to kind of where our probabilities were sitting. Again, 100 basis point hike was essentially off the table until today. So I'll actually pass it over to Sia to kind of run through a couple of charts with us.
Absolutely. So the first thing that I want to run through here really quick is actually just the SPY. So the S&P 500, we saw, as some of the guys were alluding to, we saw, the biggest drop in 2 years, 5.3% in one day. And to your point, Mata, a lot of these times back when we had some of these hikes, back in, let's say June, we saw like a pretty noticeable, from literally June 18th to August 18th. So basically 2 months, we had, an 20% rally in the S&P 500. And a lot of that's based on, the expectations that we had and beating some of those expectations early on with those, sometimes expected 100 bips that went down to 75. We had some where we expected a 75, we got a 50. And so a lot of those are going to contribute to some of these pumps that we saw, like late May especially. We saw this. I believe this was right after one of those meetings, and we saw, just in a week or so, we saw an 8% pump in the S&P 500. So definitely something to be watching in terms of where the expectations are going to lie. That's going to dictate which way the market goes. And, I think a lot of people would be saying, okay, this is, the bottom essentially of like where we could go based on this just recent CPI print. But looking at, the RSI in terms of where we could be, oversold or overbought, we're barely even halfway to being oversold at this point. So we have quite a little bit of room here to play in terms of going down further. But definitely a lot going on in terms of watching the SPY based on the expectations. So the S&P dropped 5%. We saw Bitcoin drop 12 to 13% on the daily candle. And so this is always going to be a little bit more volatile in comparison to the S&P 500. And then here, this yellow marker, this is the upcoming Fed meeting where we're going to decide whether it's 75, 100 bips, whatever is going to come out. That's when they're going to make the announcement. So I would say we have a pretty decent chance of, coming back and checking one of these supports after that, or even before, depending on the confidence of the market. But I think right now really are like baked in support, even if we get really, really bad news and it's above expectations on that BIP hike, I think we'd be looking below, 18K on that potentially. And then obviously we had gold drop, but then we also have the dollar actually doing quite well. And I think that's actually at an all-time high right now, or approaching an all-time high of 110.
Yeah, it's interesting to kind of think of this like this is all happening because of inflation, right? And I think a big thing that got a lot of us moving towards Bitcoin and kind of freedom and everything like that is like this is kind of our safe haven away from that. And so I think it just goes to show that we are still so early with Bitcoin kind of trading with the other broader markets. And I'm kind of just excited for hopefully at one point Bitcoin to be that inflation hedge where people see these numbers and they start moving over to something like Bitcoin. So just kind of my 2 cents on that.
I love that. Should we take a look at some of the inflows and outflows of crypto and Bitcoin?
Yeah, let's go ahead and do that really quickly to cap us off here. Let me share my screen. Can we see this?
Got it.
So we do this every week. We go into some of the inflows and outflows of the crypto market, specifically from James Butterfield. And so what we saw this week was an outflow that was pretty significant of about 63 million. And so if we come down here to some of the specifics, we can actually zoom in. What we're seeing is this is mostly an outflow out of primarily Ethereum here. So we're seeing about 61.6 million of the outflow coming strictly from Ethereum, 13 coming from Bitcoin, and then a couple others make some waves. I think the biggest thing to call attention to is right when we were seeing that Bitcoin pump, we actually had a short Bitcoin weekly inflow here from some of these organizations that we track on a regular basis. But those were kind of the main things that I saw when I took a look at this was the big outflow out of Ethereum and then short Bitcoin coming at a time where Bitcoin was kind of pumping, right? So it's like someone knows something that we don't quite know. But any thoughts on this?
Yeah, I think the initial reaction can be like a little bit concerning on that Ethereum front, but we talked about this briefly like just 2 seconds ago. But the why kind of my theory around why there's a lot of outflows of Ethereum is that a lot of these firms, have arms that are swing trading, have arms that are in and out of the market. And so when Ethereum hit, 890, 870, from that point, it's a 90% gain. 9 times out of 10, firms are going to take that profit. So, I think at first it looks concerning because it's like, hey, it's right leading up to the merge. Like, this is one of the most exciting days for Ethereum, or exciting weeks for Ethereum. But at the same time, money is money and profit is profit. So I think that might be playing into that as well.
Yeah, a lot of times I think the thesis also on the merge trade was, okay, we're going to enter sometime over the summer and we're going to get out right before. Like a very not emotion driven, just a pure thesis type.
Right?
Not even, I don't even know if it's sell the news now that Garcia is kind of bringing that up. Like, I feel like it's almost just like okay, this was the hypothesis, it worked, and we exit with the profit. Or they probably had some sort of stop loss in if the market continued to go down, right? So honestly, it was a good trade. And I remember still when we first started checking the fund flows, when we saw the pair trade, that one was a kicker. I really like seeing these every week because it gives you insight into what kind of some of these bigger. As always, to the listeners, thank you so much. Make sure to like, comment, and subscribe down below, and we'll be back next week covering the Ethereum merge. Here we go. Signing off. WAGME.